Happy Thursday. Happy day before Memorial Day, a long Memorial Day weekend. This is Kathy Neifeld. I'm one of the partners with Agency One, and I am thrilled to introduce to everyone our new disability income uh, solution for our Agency One advisors. We have created a disability income desk through our sister company, Brokers Underwriters Associate. And that disability income desk is being led by Howard Klebanow, whose official title is the Disability Income Sales Director. For those of you that were at our annual meeting last month, we introduced Howard to the Agency One and Broker Service Marketing Group and BUA attendees that were at the meeting. And we are thrilled to be now housing our disability income solutions in-house within underneath the specialty program group slash hub umbrella. And Howard is leading the charge. So we wanted to take this opportunity to introduce all of you to Howard. And Howard is going to talk about his background, some solutions and strategies that he is employing now. We have a number of advisors that have already been working with Howard and his team. And I can tell you that Howard has been delivering what seems to be the impossible. And I've promised Howard that not all of our cases are as difficult as the ones that have been crossing his desk, but he continues to impress. So, just briefly, Howard has over 40 years of experience in the individual and multi-life disability insurance market. He's a seasoned expert in income protection, case design, and underwriting. His career spans underwriting, brokerage, and executive leadership roles at leading firms including Provident, Paul Revere, Cigna, Clark Consulting, Skylight Financial Group, Mass Mutual, and most recently, Berkshire Advisor Resource. We are thrilled that Howard is now a part of the team, and I'm going to turn it over to Howard. Just some housekeeping before I do that. If you have any questions, please put them in the chat and I will address them with Howard during the presentation. At the end of the presentation, we're going to open up the microphones and we're happy to have some dialogue directly with Howard. So thank you for dialing in. Thank you for your attention. And it's my pleasure to introduce Howard Klebanow.
Good morning. Thank you, or afternoon, pending, I guess, where you are in the United States today. Thank you for attending, and I look forward to this opportunity to talk about disability income, or I call it more income protection, because that's really what we're focusing on when we talk about these things, is how are we protecting your client's income if they get sick or hurt, or how are we protecting their business or their retirement or whatever that case may be, should they get sick or hurt, and what are the solutions that are available. Let me start by giving you a little background on business underwriters. Hit the slide, if we can move it one slide, Lisa. So how this all came together, obviously, as Kathy has talked about, BUA and Agency One share a relationship through Hub International. Roughly 5 years ago, I came over to BUA because it was disability was an area that they had not put forth a whole lot of expertise on, and I had known the people that owned it for a long time, and so we created a whole disability division within BUA, self-trained. So most of my team, I've done most of the training with, because I wanted to build it in a way that we made sure that the producers and what we needed to do were coming first and not carriers in that scenario. What does that mean? What it means in disability is how aggressive, when you send us a proposal, can we be in defining an occupation class? How aggressive can we be in pushing the envelope based on what we know medically in advance to try and go ahead and get you the best type of offer or what we need on the front end versus the back end. How can we be as proactive in this process with you versus reactive? And we'll go through a little bit of that when we go into the process, but it means things like our team is trained on understanding income, understanding a tax return, or working with me to understand a tax return to make sure when we're talking about income, we're sending the right numbers that match an application and things like that. So we're not constantly, if we can help it, bothering you and especially your clients 5 and 6 and 7 times for information, which if you go back 20, 30 years, was a common occurrence in the DI environment, and why so many producers ways back were frustrated with what goes on in a DI environment. Uh, we are set up, as you'll see today, to work in so many different areas of disability. And we're going to talk about 7 or 8 different areas when you think about disability. Most people say disability and think about protecting income. We're going to talk about all the other areas. We're also very advisor centric in that I started in underwriting. I actually majored in insurance at the University of Tennessee a whole long time ago. But I've been in underwriting, I've run a DI operation, and we'll go through all this in a second, but it's helped us to become very advisor uh, centered, recognizing that every case is different. And part of our responsibility to you all is A, to listen and hear what you want to accomplish, and then B, if there are other options or ideas out there, to make sure we get them to you, because the majority of you don't make the majority of your income from disability insurance. So we need to be your back room and the people that are giving you the guidance to help you talk through this with your client. In some cases, I've done calls and webinars with brokers and clients. So whatever that case may be. Let's move on to the next slide. So some background on myself, and it's always challenging when you do that. But as I said, actually majored in insurance at the University of Tennessee back in the days of old, as I would call them. I started in Chattanooga, Tennessee as an underwriter for Provident Life and Accident, spent 3-4 years with them. And great story for those of you that are somewhere in the same age vein as mine. My wife actually had a job as a commodity merchant and knew that there were very few cities that we could move to when she moved. So she put in and ultimately moved to Cincinnati, Ohio from Chattanooga. I walked into my boss's office in underwriting at Provident and said, "Hey, we're moving. I'd love to go into the sales force at Provident. I know you've got an office in Cincinnati." And his response was, "You know too much. So no, we can't have you do that." Picked up the phone, went to Paul Revere, and spent 11 years as a brokerage director with Paul Revere, going through everything for those of you that know the Paul Revere model and everything that went through that. Then spent 3 years at Cigna, actually running the sales side of their entire operation. Had the pleasure of flying from Cleveland, Ohio to Hartford every 2 weeks. But it was an insight as to how to take a whole different environment and what does it need. In that perspective, I actually worked with our underwriting team at Cigna on how to you as life underwriters underwrite DI, things like that. The rest of my time was a lot of different disability. I've spent a lot of time at places like Clark Consulting, was doing guarantee issue executive benefits. Skylight Financial was a large mass mutual shop. I ran brokerage, but also ran a lot of the day-to-day operations. They were a financial planning shop, which gave us a lot of expertise on how do you take a financial planning model and tie that in to disability or income protection or business buy sell or so many things that go on there. And then taking the expertise in the last scenario, and we'll talk about these later, in case design. If I were to tell you in a month we got 100 proposals, I would tell you 98 of them are for 90-day wait, benefit to 67, everything you could ask for, with no thought process of how do we create a scenario that may fit your client better than just absolutely going for the max of everything. Can your client reinsure some? Can we cover the fixed expenses long-term and the variable expenses for 5 or 10 years? So all of those type of things are things that we're going to talk about as we get into how the process and how it works. Moving on, why does disability matter? Not going to spend a huge amount of time today on statistics uh, because most of you I know have been in the business quite a while, know a lot of the information. But it simply matters because everything that a client who isn't retired does is driven by their income. And if that income goes away prior to what our plan is, there's a gap. And if we don't have the disability or the income protection insurance to protect that gap, somebody has to fund it. If it's income, we have to figure out who's going to help that disabled person to get income. If it's a buy sell, how are we going to deal with that? If it's a key person, what's the business going to do for that issues? And there's so many areas, but everything is really driven by income. And if you think of the old model of a house, the foundation is the most important part, and that's where income comes into play. We recognize that, and our job is to help you figure out how to mitigate it as best as possible. So what I've created in coming over here that we do have are a lot of tools and resources to try and help you. If you know the DI market well and you don't need them, then they're more simple type of things like proposal sheets, ways to give us information one time of everything that we need. If you're someone that isn't quite involved, we have a couple of different DI disability fact finders. Um, some different informational type of stuff. And then a lot of times it's just an email or conversations, as I said. Uh, One of the things I'm an advocate of in a lot of scenarios that people don't do is multi-benefit period policies. If I'm dealing with a 50-year-old, their fixed income may be much more straight, and we want to make sure that fixed income is covered for the life of the contract. But they may not want to spend that whole money of doing all of that. So it might be in a $10,000 policy on a 50-year-old. We're looking at a 5 or a 10-year benefit period for part of that benefit, which still gives them all the time to make their adjustments, but may take $1,000 or $2,000 off of the premium, which may make it seem or act more affordable. It may be we're changing with benefit periods. So there's different things when you talk of customer design. Another simple example is we just had a case of two female business owners, both making large amounts of money that we were quoting $10,000 a month on. What did we simply do? We showed them exactly what the broker wanted, and then we gave them a separate proposal, which said, hey, if you add your office manager for a 2-year benefit period and a minimum policy, the end result is your two key people are going to save almost $1,000 on the total coverage, because we're going to now make this a multi-life case with unisex rates. And on the female side, unisex rates make it about 20 to 30% less on a female. So we're constantly going to be looking and talking with you about those type of scenarios. If you're somebody that just says, hey, we want a proposal, let us know. We're happy to just give you what you want. But if you want us to be a part of the process in your back room, we're also happy to do that. Moving on. So the process for us, the process is really how can we make it as easy as possible in an environment that isn't quite as easy as other products. On the life side, as an example, you have things like Vive, where you can go in and do 30 different applications with different carriers. On the DI side, and we'll talk about it, every e-application is done on the website of the carrier, with the exception of Mass Mutual. So every case we're writing with an emeritus or a principal or a standard, we have to get you contracted to be able to get you access even to think about the process of e-application. And why e-app? Because carriers are now starting to give discounts if you do an e-application in the DI world. Emeritus and Standard both have gone to that model, which means we need to make sure that we're there to help you or your assistant or whoever it is that may be completing the application through getting into a website, getting into the EAP process and understanding their lingo to get the application completed. That same thing falls true once we get to the application stage and we're going through underwriting and the case may not go exactly like you want. Part of our process says if we get a case that isn't issued as applied for, before we even go to our broker, it's coming back to me or to the team to be able to say, okay, is this a issue that all carriers are going to look at on the traditional vein, or is this an issue we need to shop with one of the different carriers? If it's a decline, can we go to our substandard carriers? And we'll talk about that in a little bit, and therefore say, hey, bad news is due to medical history, your client's going to be declined by Principal or Mass Mutual or Ameritas or whoever it is. The good news is we've talked to XYZ, Fidelity, Security Life, Lloyd's, and we can get them covered for this and this and that type of model. So our goal is to be, again, your back room, not to be a separate entity, but to just be an extension to try and help you get to where we need to get to. Moving on. And I've really hit a lot of this, you know, on the front end of this, but I'll touch on the importance. I know, and Monique Nordberg, who you'll see at the end, who's my primary internal when it comes to all the front end stuff, as we've spent a lot of time in the process of occupational classing. And that's where we really focus to be a difference. If you're dealing purely in doctors, it's pretty easy. If you're dealing with all attorneys, it's pretty easy. But once you get to business owners, the concept of occupational classing becomes very, very different. Carriers will up classes based on how long a business owner's been in business, how much they make, how many employees they have. Uh, some carriers will even up classes just based on W-2 employees that have that same type of scenario. So one of the things we'll constantly be doing as we get proposals is going back to you if we see an opportunity to potentially get a better class and therefore a lower premium, and trying to get that information in advance instead of saying, oh, here's a quote, and then you coming back and saying, well, can we do better? Or all that process that goes into play. So hopefully it's something that you're looking for, and you'll be patient with us, or as you start to understand what we're doing, you'll say in your head, hey, up, this is a business case. I need to make sure that they know how long they've been in business, how many employees and what their income is, so we can get 3As to 5As and things like that. That's really where we try to make our difference, as well as, like we said, the back end of trying to come up with a way to get you an offer, even when it looks like no offer can be had. So that's kind of the front end of what we do, just giving you kind of a quick one-page sheet of carriers. Basically, we've got most of the primary carriers. The biggest carrier we do not typically have is Guardian. They work through their own BGA or their own GA network. They don't even work in the BGA space. Can we get access to a Guardian quote if it's absolutely needed? At least so we can know and help you in understanding if your competition is Guardian, how to handle that. We absolutely can. Part of the reason we do have a broad base is more than you would think. In the guarantee issue market, it is amazing how 4 different guarantee issue carriers will treat some cases so drastically different in the same scenario. I can give you an example right now of a case that we have from an underwriting standpoint with someone that just a couple of times a week does gummies to help sleep, edible gummies, or, we've got them with marijuana. Well, every carrier is different in today's world, how they're going to treat all of those different things. And so our role is to figure out within all of our carriers who is going to write them and who's going to give us the best opportunity to make it standard or whatever the case may be, as well as some of them that are purely there for our substandard carriers, high excess, some of the other products that we use to give you a whole portfolio as to what we have. Before we go into concepts, any questions? Have we had anything that we need to go over prior? Or are we ready to move on? Kathy, Lisa, anything?
I do not see any questions,
Okay.
and nobody has raised their hand. So we're monitoring it. So let's keep going. And if
Oh,
anybody has a question, we'll be happy
all
to
right.
address it.
All right. So if you were at the conference in Washington, D.C., and you stopped at the table I was at, you got a one-page sheet that talked about all the different ways to be thinking about disability. And this is kind of a lot of what we're going to spend our next bunch of time on. Uh, and we're going to start right with personal income protection, probably the one that most of you on this call are most familiar with. We have somebody that's got income, and we need to make sure we develop a way that if they get sick or hurt, they're going to get income from an insurance company to go ahead and pay their bills, pay their house, pay all the different things that they need to so that things are covered. But what goes into personal income protection carries a lot of different variables. Uh, and I always say that one of the biggest challenges is words matter in disability insurance. Not that they don't in others, but when you think about, as an example, life insurance, your main focuses are death benefit, cash value, and those are probably your main two. It may be waiver premium, but you're not focusing on things like how do you define when someone is dead. Whereas in disability, how we define how someone is disabled becomes an important part of the process. Why? Well, in all the years that I've done seminars, and I've used this line many a time, and I'm sure since one day someone will go different, but there's really only two insurance products that the claim is not obvious. And those two products are disability and E&O. Uh, why is it not obvious for a disability claim? Well, how much pain someone suffers when they hurt their back could be a major factor as to how they can handle and whether or not they're not disabled, how bad it is, how debilitating certain things are. Uh, when you get into claims like mental nervous, when you're not necessarily looking at an MRI or an EKG, and you're really just looking at a doctor's report to try to determine can this person walk or not, there's much more variables to it than clear cut. So it's important when we look at what we're trying to ensure, how much income we're trying to ensure, what the person does, that we also make sure we're focusing on the right definitions that they have. So often, a lot of our people have group benefits that take care of 60% of their income up to a maximum. One of the greatest challenges are companies write group benefits because they're cost effective, but a lot of group benefits don't worry about some of the words in the contracts. So very often we have corporate executives that may have 10 or 15,000 a month of group benefits that say after 2 years, the insurance company has the right to say, hey, instead of being a corporate executive, you could go be, head of an accountant in your accounting department where you just have to sit and punch numbers or whatever. And that's somewhat of a light job. And now you're no longer disabled, whether you want that choice or not. So making sure that we match the right definitions of disability, the right definitions of residual, as well as the other key features that are in a contract, that we match them to what we're trying to accomplish with your risk, with your client. And then at the same time, get it to a premium level that is acceptable to everyone, is what we want to be accomplishing when we look at personal income protection. I talked a little about using creative. There are some carriers that have 10-year benefit periods, and that has created a whole new flexibility for many of us. If I'm dealing with a 50-year-old, so often now we're looking at a 10-year benefit as well as a to age 67, because if they're in a good retirement mode, they may be able to say, if I get disabled at 52 and I go to 62 and I'm good, I can go ahead and move from there. So I would rather save that 20 or 25% or whatever it may be in using a 10-year versus a 2865 or 2867. On the flip side, they may not have put away enough, and we need to go to the opposite side of what we're trying to do. The other thing that's important when we talk about personal income protection and disability is making sure they understand the whole story. And when I say the whole story, I talk a lot about that 40-year-old individual who goes ahead and says, hey, I see what you're saying, but I'm buying $1 million of life insurance and I'm buying $5,000 a month of disability. Why are those premiums the same? Or why is disability even more? And we haven't said, hey, if you got 5,000 a month, that's 60,000 a year times 25 years if it happens right away. And yeah, if you die tomorrow, you get $1 million. But if you get disabled tomorrow, you're getting 1.4 million plus cost of living. So sometimes with clients, we have to get them back into an understanding as to what is actually the value of the contract that we're trying to get to. Can we scoot back for one more, Lisa, for a minute? So two other things I want to touch on as we keep moving forward. Um, we have the capability to do all different types of high indemnity products. We have done NFL players, we have done entertainers, we have done singers. So again, we have 3 different Lloyd's outlets, and each Lloyd's outlet is different as to where their strengths and weaknesses are. So we've got the ability to do those. We also have the ability to take the case that you've got $1 million executive and make sure that we're lumping the correct traditional carrier with the correct Lloyd's carrier. The other thing we've started to do more of is look at a case that especially has declined, and instead of just saying, hey, it's declined, we're sorry, we have a carrier, Fidelity Security Life. Some of you may know them, but they take 85 to 90% of the risks that are declined with some exclusions usually on a 5 to 10-year benefit period. And they do it because they're unique. What they do is they say, if I buy this policy, the first 2 years, they step up. So in year 1, if you go on claim, you're only going to get 40% of the benefit. Year 2, you're only going to get 75% of the benefit. But once the policy is in force for 3 years, it's a full policy, maybe with some exclusions, but in some cases, not near as severe as a traditional carrier. It also typically doesn't cover much in the mental nervous area. So where a lot of cases are declined due to high levels of stress, anxiety, things like that, Fidelity Security Life says, hey, we're good with those. And they're different than Lloyd's. They're a true guaranteed renewable contract. So your premium is going to stay the same to 65. Your contract's going to have the guaranteed renewable structure versus a Lloyd's that has a 3-year or 5-year benefit plan that you have to re-enter. So again, our goal is to try and have all the options for you to do as much as we can to get your clients protected one way or another. Now we can go on. So the next product I want to talk about briefly is just the retirement contribution concept. And it's one that gets so misnoticed or not talked about in the industry. But when we talk about protecting income, we're talking about protecting your client's earned income, meaning their W-2 wages, bonuses, obviously, all those things fall into earned income. So anything that's considered earned in the federal system. What isn't typically earned income are 401k contributions, matches from companies, SAP, some of those type of scenarios. So if your client is putting a lot of money in their 401k, what happens if at 50 years old, your plan falls apart because they get disabled? Maybe you've done a great job on their disability part, or they have good disability through the company, but now that $1,000, $2,000, $3,000 a month that they're putting into a disability, into a 401k, into a SEP, whatever it might be, isn't happening. But they're not dead. So come 65, they're now ready to retire. They've been disabled for the last 10, 12 years, and there's a huge gap in the amount of money that is in that retirement plan to get them where they need to get to. Principal and Mass Mutual have created programs that are retire contribution programs where basically what happens, and you can see from the slide here, is we're using a standard type disability contract as a total only. And what we're doing is we're saying if after 180 days, your client is still totally disabled and therefore not able to put money into their 401k or retirement plans, they will start to collect a disability benefit on this contract. However, the word collect is different than normal in that instead of collecting it, that money is actually going to go into a trust that the policy creates. And Mass Mutual and Principal do them a little different in that Mass Mutual has a trust company. So they run this through their trust company, which makes it a little bit better, but both do it well. And in essence, what it's doing is it's putting the money from the policy. If you paid for with it with after tax dollars, that money is going into the trust tax free. Then you're being given, your client is being given options. In Principal's case, it's basically a bunch of mutual funds. In Mass's case, it's much more broad to take that money, have it invested, do what needs to be done. And then the growth of it is growing taxable because that's the one area we can't totally make it look like a 401k, but that part is growing taxable. However, they can go ahead and take from that fund with a few hardships, and those hardships are medical necessity, home foreclosure, college funding, or they can take for it to pay the taxes on whatever there are in the trust. So we're building kind of a sideline pot to go with everything you've done. So now when we get to retirement age, that process is still whole and continued. If they have it for a year or two, and then they're no longer disabled, then the pot just sits there for them as a retirement plan until they're ready to collect on it. But it freezes when they go back to work. And we can move on.
Hey, Howard.
Yep,
We did have a question that came
sure.
in from Thurston, who asked, do you underwrite group, short-term, and long-term disability insurance, or is it only individual DI?
So we do have a short-term carrier in Reliance Standard that typically, if the industries are right, we can look at for under 20 lives. The long-term side of it, we really can't get too involved with because most of these carriers run everything through their regional areas. So they're not centralized like an individual product or some of the small groups. Certainly we can give you expertise. So we can help you with who might be the right carrier to go to or things like that, but we're not actually quoting and doing the group long-term disability type cases. Um, the one exception a little bit would be if we're dealing with companies where we're dealing with guarantee issue, and I'll talk briefly about that in a minute. Then we probably would be we'd still probably be sending you to your group LTD person in your area, but with very specific design guidelines or things like that, because we're looking ultimately to take corporate executives, a bunch of them, supplement their group with individual better contract designs, but on a guarantee issue basis. And if you have questions on that, certainly feel free to reach out to me. If you have small group carriers, or we can fill you in on Reliance Standard from that. The majority of what we do is more on the individual side. So just kind of finishing up on the retirement stuff. What are target markets? Uh, I don't look at target markets as an class. It's more of, who needs it. So full-time employees that, are making typically 50K or more, because with this being a specialty type product, that person that's living paycheck to paycheck is not going to spend money on protecting their retirement piece in disability. So it does have a little bit more white collar oriented to it. It's often sold to business owners, CPAs, a lot of professionals. We also see it where the group LTD is in good shape and they're looking just to supplement their group for a group of people or just for themselves, so they don't feel they need individual, but this makes sense. So they've got a good group and they're willing to spend that money to make sure this part of things are protected. Up into the next slide, you can kind of just see from this next slide what it looks like, how the whole concept works if you didn't have it, and where that gap gets filled by having a specific product to the retirement thing. The other nice thing about the retire product is it's a 180-day wait product. It'll go for 5 years, 10 years, 67, however they want, but it's total only. So when you think about the risk side of it and how if you've done disability in the past and oh my God, we've had ratings and this and that, when you're quoting it at 180-day wait and total only, getting an underwriter to be more flexible is easier to do because that exposure is a little bit less and the amount of coverage that they're applying this to obvious is less. Plus, the concern that always comes in, and I've seen many a claim of claims abuse on an income protection policy is a whole lot less on a policy where your client's not going to get the money till they retire. So typically when they're getting claims on these policies, they're a whole lot less questioned because the risk of whatever we want to call it, trying to trick the system is a whole lot less. Moving on as we continue. So basically what we've done is talked about the individual side of protecting people. And I will take a break to say one thing we have to think about when you talk about individual that we think a lot about with carriers are the unique riders that some of these carriers have. So if many of you are used to one or two carriers, you may not be used to some of the unique features that carriers have. Just a couple to think about to give you an idea of what we're talking about. Ameritas has a feature called the good health benefit. What is a good health benefit? It's part of the policy, and it says that every year you own an Ameritas disability policy, your elimination period that you don't go on claim, your elimination period is reduced by 2 days. So in the resident market, we're seeing more and more residents looking at Ameritas who has as good a definitions than anyone else. But that 28-year-old who says, oh, I'm not going to get disabled till 25 or 30 years down the road, it might be burnout, it might be this, now buys a 90-day wait and at claim time has a 50 or a 40-day elimination period because of that feature. The standard has a feature called the family care benefit. What is that? I just actually had one. Had a scenario where we had an attorney whose 82-year-old mother has grade 4 cancer. Is going to have to go through either chemo or whatever they want, and he's going to have to take some time off to help care for her and do whatever needs to be done. The family care benefit says if you have an immediate family member, parent, child, spouse, who needs care because they are severely handicapped or terminal, and you have to take off time up to 12 months, that rider will go ahead and pay you like you're disabled. So if you have a $10,000 a month policy and this man is going to have to take care of mom until she passes, basically he's going to get paid $10,000 a month on his policy, even though he's not disabled. That's the standard unique feature. Mass Mutual, probably the only carrier short of a Northwestern that still pays dividends on disability. In Mass's case, it's typically been after year 6. And it varies in a couple of states like New York, where the dividend is based on experience. They've had years that have been 30 and 40%. Typically, it's about 10%. So as we're thinking about carriers, and you're thinking about carriers, it's also important to think about which carrier am I using and why? Or, hey, why did they send me Emeritus in this case? Oh, yeah, this is a 28-year-old person. So their premium is as good as a mass or a principal or a standard when they did it, but they have that good health benefit feature. So those are things just to kind of keep in mind. Moving on to other products to be thinking about. Some are most people do. You've got the standard stuff of business overhead, small businesses, dentists, small dental practices, eye practices. What happens if that person goes down for 6 months to a year? Their practice falls apart if they can't keep the doors open to at least have their people in a dental practice have their teeth cleaned or whatever the case may be. So the ability to be reimbursed for your fixed expenses like your rent, your utilities, the person that answers your phone, the person that does billing, makes it easier for you then to have money to bring in a part-time dentist or someone that shares a practice while you can't, so that the dental hygienist can still work, things like that. So overhead has its place in the marketplace. Uh, you've got buy-sell protection. So often life insurance buy-sell is something a lot of people do. They forget the fact that there are three ways that you can come out of your practice. It can be, or your business, it can be you choose to, but it also can be you die or get disabled. And in a lot of cases, if you have a buy sell agreement with a partner or with an employee, if you own it 100%, there's a feature in there that says if you get disabled, you're going to get so much money after so much amount of time, and so that needs to be funded, whether it's going to be funded by a loan when it happens or whether it's going to be funded by an insurance contract. We have carriers that are going to make sure that's taken care of. Uh, we have a couple of carriers that do key person. We look at so many of these different things that go on, whether it's a manufacturing company that has one tech person that drives all their technology. And if that person goes down, they could probably find someone, but it's going to take a significant amount of time to do it. So they need to make sure that they have extra revenue coming in to go ahead and either overpay to get somebody in quickly or pay for outside consulting help or whatever it may be, to go ahead and make sure that that key person situation is taken care of and taken care of appropriately. I also want to spend a minute or two, and it's not in the slides, for those of you that may be in the business or the corporate arena, on guarantee issue, because we're starting to see more and more in the individual marketplace on guarantee issue disability. The key to it is it needs to be corporate paid in most cases, but it'll start at 5 lives for most of our carriers. That means if you're talking about companies with 30 to 50 employees, typically there are anywhere from 3 to 10 executives, salespeople, owners, attorneys, whatever that case may be, that there's a disability opportunity. Most of the carriers, and most would be Principal, Standard, Ameritas, Mass Mutual, will look at doing guarantee issue disability at 5 lives. What does guarantee issue mean? It means basically that they're not going to ask any medical questions. They're going to get a census that gives them the name, the date of birth, the occupation of what they do, and their income. And they're going to protect that income no different than if they bought a policy. Even the nicer part about that is with most carriers at 10 lives and even Principal at 5 lives, in the disability world, they've now started to do these, with the exception of in New York, or a couple of occupations, without applications. So we're writing a case with Principal now. It's an 8-life case on a small attorney firm. And literally it's being written by a census. And once the census goes to the carrier with 2 or 3 signed forms that the administrator signs, 7 or 8 policies are going to come out. No, it's a non-tobacco type of policy because tobacco questions aren't asked. So guarantee issue has been made easier. Now, the hard part to guarantee issue is still the issue of the corporation has to pay for it. And there is only carrier that'll even look at doing voluntary at all right now seems to be Ameritas. And they're looking for, if they're going to do voluntary, something that's going to generate or has at least 50 to 75 eligible lives, so that they can get a 20 to 25 lives in the plan, so they get a good enough law of large numbers to be able to justify doing guarantee issue. But if you're in those areas, certainly feel free. And if you have a business owner or a key person who has a lot of health history, before you try and get them coverage, one of the things to think about is, can I create a guarantee issue model? Because once the client has gone for coverage and been declined, they're not going to be able to then jump into a guarantee issue type of setup.
Hey, Howard,
Yep.
we did have another question
Yep.
from Mitchell, who asked, how is the retirement product invested?
So, so in essence, each of the 2 carriers are different as to how they do that. In the case of Principal's case, once the trust is set up and benefits start to go in, they will reach out to the insured and basically give them, and I don't know what their number is, 10, 12, 14 different mutual fund options that they can go ahead and tell principal as to how they want that money invested on a month to month basis, with the ability, I think, once or twice a year to make changes to those mutual funds based on what's going on. In Mass's case, Mass has more flexibility because they use their own trust fund. So I've seen scenarios where a client has said, I want to buy 100 shares of GE stock. But it is basically client to carrier. So as producers, it's not like they get the money and you have the ability to do the investing. You can help direct them, but it's going to be direct in that format. I think Mass doesn't charge fees in most of what they do because it's their own trust company, and their trust fee is a little bit less than the principal. Hopefully that answered the question.
Um, we're gonna open up the mics as I
Yep.
think Howard has one or two more slides, and then we're gonna open up the microphones if anybody has any additional questions. I think Howard, you just you skipped over your team.
Yep. Lisa, if you can skip back one. So basically, my team is set up right now and growing. Monique Norberg, who's on the call, is really the pre-sale person that does a lot of the proposals with me, case design, all of those type of scenarios. She's been doing this since I came over to BUA. She's a life guru, and now she's become a DI guru over the last 5 years and understanding a lot of how to walk class, how to do all the things that we've talked about here. From a contracting and licensing standpoint, Tina McIntyre is our person. Now, again, the big thing to note is if you're already doing business with Agency One, you've already done their Sure LC. So many times Tina will just reach out to Agency One, get your information, and be able to contract you without ever having to reach out to you. Uh, if you haven't updated an E&O or something like that, she may, but don't panic if you don't hear from her ever, because the information may be done. And one of the beauties are Agency One and BUA is sharing anything we have to make sure we're one entity doing everything. Colleen Zeri is the case manager, who most of you will hear for when the case is in its underwriting process. She's the one that I'm working with as far as ordering APSs, income documentations, working with carriers to get what we need, all of the things that go on. She handles disability. There are a couple of more case managers that if she decides to go on vacation or anything, will pick up and handle that. Jessica Thomas, Tina Morris. So there's a backup team behind all of these people that have basic knowledge, but this is a day-to-day team that you're typically going to hear from in one way or another based on what you're trying to accomplish disability-wise. And now I
Terrific.
think we can open it up to questions. We've tried to keep it, within the time frame of, an hour, and leave 5 or 10 minutes here at the end if there were any questions. Certainly, I've done enough webinars, some people don't like to ask them, do them. So you have my contact info, which I don't think we've actually put on here. You can reach me at Howard, or it's actually right there on there if you take a minute. You can see it's Howard K at buaweb.com, and the phone number is 330-576-1105. And if you don't reach me and you need a proposal right away, you just go to 1127, and that's Monique.
And of
So
course, if you have any questions,
yeah,
please reach out to me or Gonzalo or Ed Stark or any of your team
yep.
members at Agency One, and we will make sure that we can connect you with Howard and his team. We're very excited about bringing our DI resources in-house. As I mentioned when we started this webinar, we have only had really positive feedback from the Agency One advisors that have already been working with Howard. I've had a great deal of interaction with him so far, and the experience has been really wonderful. So we hope that you will give him and his team an opportunity. If you have any questions, you want to bounce some cases off of him, ask him, anything regarding DI. He is our resource and is happy to help. Does anybody have any questions? I think Lisa opened up the microphones. Um,
The one other thing I will touch on real quick, because Kathy talks about, we've already seen an increase and had a couple of cases where life and DI were being done at the same time. And the ability to coordinate things like exams and APSs becomes so much easier in the process. We have either one of the teams, so it's not like both teams are ordering all this. Agency 1 and BUA are working together both on your life and DI case to share information and do all of that to make this process so much easier than when you're dealing with multiple outlets.
exactly. All right. Well, Howard, thank you. I'm not hearing that anybody has any
Okay.
questions. On behalf of Agency One, welcome to the team. And we hope that people will be reaching out to you. For those of you that were at the Agency One Advanced Markets meeting, I am thrilled to announce that the presentations are now available on the website. So feel free to reach out and look on the website. Wait, we might have one more question. Oh, good presentation. There we go. So thank you, Thurston. Um, the presentations, anyhow, are on the website. If you have any questions, please reach out to myself or to Lisa or Danielle or Gonzalo, anybody at Agency One. But I think that we can conclude this. This webinar has been recorded. If you'd like to listen to it again, it should be available sometime next week. And I hope everybody has a wonderful Memorial Day holiday. And let us know how we can help. And as always, we know you have choices, and we appreciate you doing business with Agency One and our sister companies. Have a great afternoon. Thank you, Howard.
Thank you. Thank you. Bye, everyone.
Take care.